Friday, I have a special treat for you. I have my brilliant, wonderful friend from Value Plays, Todd Sullivan, is going to join us today, and we're going to lay out the case for a really interesting trade here. Okay, this is a high-risk, high-reward one. Okay, if this pans out, we're going to be able to all afford Yankees tickets for the year. Okay, and I'd like to have Todd come on now, and he's going to explain about this property. I met Todd on StockTwits, and he's been a brilliant, well-thought-out, very insightful person, and I've learned an awful lot from him, and I'm going to share that with you today. Todd, do we have you with us?
Yes, you do.
Hey, my friend, how you doing this Friday?
Excellent. How are you doing?
Good, man. Why don't you tell people a little bit about what your thoughts are on this General Growth Properties trade?
Well, General Growth Properties right now it's the largest mall owner in the U.S. It has over 200 million square feet of retail operating space and does business in, I think, about 46 states. Currently, they are in default on about $2.6 billion worth of loans. And this Friday at 5 o'clock is the deadline for them to gain support from their debt holders to refinance loans, to either keep them in an extension or to file bankruptcy.
Wow.
My thought is what they'll probably do is file bankruptcy, and in the end of the day, that'll be the best thing for shareholders.
Okay, because you were telling me this. When I saw it cross the wire the other day, I'm not anywhere near as familiar with this as you are. When I saw it cross the wire the other day, they were going to say file bankruptcy. I went, oh, no, and you said, that's good. That's not going to wipe out the shareholders. You think that time, or that's what the risk is here?
Well, essentially, if you're buying shares of General Growth Properties, you're buying a call option on the survival of the company. So when you buy a call, either two things happen. You either win really big or you lose your investment, okay? My thought process is a General Growth in bankruptcy, the equity will remain intact. Debt holders will be forced to extend maturities on loans, refinance loans, and then the company, whose problem right now is it's not that it's insolvent, in that it can't cover its interest payments and it can't pay its debts. Right now it has a liquidity problem in that REITs typically roll over their loans every few years, and right now the credit market's frozen. They can't, and along with a lot of other REITs, I should say, can't roll over their debt.
Right, so it's just a normal course of business with rolling over their debt for REITs, but right now nobody's loaning any money.
Exactly. So if they're able to restructure that debt in bankruptcy, there's no reason for the equity to be wiped out. They can go on, continue, they can refinance their debts, make their mortgage payments, and continue on. If that's the case, then you could be looking at a stock price that right now is trading, I think, 68 cents a share, could be easily worth $10, $12 a share.
Oh, man. So this is definitely, this is an all-or-nothing proposition that we're talking here, and the clock is ticking.
Exactly. Because if the bankruptcy judge decides that shouldn't happen, and he decides that equity holders should be hit, then you could lose it all. But if you're buying the shares at 67 cents a share, that's your loss versus a gigantic upside.
Yeah. Well, I'm in there with you as always, my friend. I am a gambler, and I've also learned enough to respect you in the time that we've known each other. You're a super well thought out guy. We should have made this pay-per-view. But we're going to put this up and let everybody take a look at this. This is an all-or-nothing trade from a brilliant, insightful friend of mine. Yesterday I pointed out to him, and doggone it, I didn't follow you into that. He had pointed out True Religion. He saw great value in those and had a well-thought-out article that I linked to from the blog and from in the show on True Religion, and they're up 30% from them. This is a different proposition where sounds like this is going to be an all-or-nothing, $10, $12 a share from 67 cents, man, and we're on champagne for the rest of the year.
Yeah, people investing in need to recognize that there really isn't any middle of the road in this one. But Bill Ackman's in it big time. He's the largest shareholder, not debt holder, and that's important to note that. Bill Ackman's trying to get himself on the board. He's the largest shareholder, so his incentive and his interests are directly in line with anyone buying shares today.
Well,
and Bill's going to do whatever he can to
see
make
the
sure
shares don't get wiped out.
Exactly.
Hey, Todd, thanks so much for taking time out of your busy schedule to join us. You know how much I think of you. And people, Todd is a brilliant guy, and he's laying out a case here for an all or nothing. Todd, thanks so much, and have a great weekend, my friend.
Thanks. Same to you, Doug.